Have you ever wondered how financial analysts actually decide which stocks to bet on? Well, today we're going to pull back the curtain and build a step-by-step playbook for analyzing pharmacy stocks. Basically, we're turning you into the analyst. Let's be honest, staring at a stock report can feel like trying to read a foreign language, right? All those charts, all that jargon, and the endless numbers. Yeah, it's enough to make anyone's head spin. But what if you had a clear, step-by-step playbook to guide you through it all? That's exactly what we're here to do. We are going to demystify this whole process and give you the tools to find the real story that's hiding in all those numbers. So, what really makes a stock tick? It's so much more than just a three-letter symbol on a screen. We're going to break down the entire process of analysis into simple, understandable parts using the pharmacy sector as our real-world lab. And to bring this all to life, let's meet our case study, a fictional company we're going to call HealthRx. Think of it as our blueprint for understanding how an analyst would approach any company in this industry. So who is HealthXRx? Well, just imagine a leading pharmacy chain with the ticker HRX. They're a household name, a trusted brand with a massive footprint of both physical stores and a booming online presence, selling everything from life-saving prescriptions to everyday wellness products. When an analyst looks at a company like HealthRx, they're not just guessing. Nope. They follow a blueprint, kind of like a checklist to really assess a company's health. They examine everything from the big picture overview and the financials, all the way down to the nitty-gritty details, like the risks and challenges they're facing. Okay, this breaks down two concepts that are absolutely crucial but are totally different things. On the left, you've got revenue. That's all the money pouring in the door. For HealthRx, this is growing steadily thanks to new markets and online sales. But then, on the right, you have profitability, and that's what's left after all the bills are paid. HealthRx has some really healthy margins because they are masters at managing their costs. A company needs both to truly thrive. But here's the thing, no company exists in a bubble. To truly understand its potential, you've got to see how it stacks up against its rivals. So let's dive into the competitive landscape. In our fictional market, HealthRx is going head-to-head with three key competitors, and each one has a unique game plan. You've got PharmaX, who dominates the big cities with a really strong brand. Then there's MediCare Pharma, on a mission to provide affordable care to communities that really need it. And finally, you have HealthWell Pharmacies, the nimble innovator that's really shaking things up. And what this shows is that there are different paths to success. PharmaX enjoys steady growth from its high-margin products. MediCare Pharma grows consistently by expanding its reach. But HealthWell, wow, they're the one to watch. Their growth is impressive, totally outpacing the industry, and it's fueled by a whole range of different revenue streams. So what does all this mean for an investor? Well, PharmaX is your stable, reliable player, offering a consistent dividend. MediCare is pretty similar, with a modest yield, but HealthWell is a different beast entirely. Its stock is more volatile, and instead of paying out dividends, it plows all its earnings back into the company to fuel that explosive growth. This paints a really clear picture of the market. PharmaX is the current leader, holding a significant chunk. MediCare Pharma is steadily carving out its own piece of the pie, and then you have HealthWell, the challenger, who is rapidly gaining ground. This is an industry in motion, for sure. But, looking at the top-level numbers is just scratching the surface. The real insights, the kind that help you truly understand a company's story, come from digging a little deeper. It's time to read the financial tea leaves. And we can do that with three simple but super powerful techniques. First, we analyze trends over time, because a single snapshot can be really misleading. Second, we break down expenses to see where the money is really going. And third, we constantly compare market share to understand a company's competitive muscle. Understanding a company's costs is absolutely crucial. Here we see a typical pharmacy's expenses, and personnel, rent, and inventory are the big three. By digging into these numbers, a company can find ways to be more efficient, which directly boosts its profitability. Every dollar saved goes right to the bottom line. What a company does with its profits tells you everything about its priorities. It really has two choices: pay out dividends to shareholders now, or reinvest those earnings back into the company for future growth. A young, hungry company like HealthWell would have a huge earnings reinvested slice, while a mature giant like PharmaX would likely have a much larger dividend payout slice. So after all this analysis, the blueprints, the competition, the deep dive, what's the bottom line?
Well, it all comes down to making a balanced judgment. It's about investing with your eyes wide open, weighing the potential against the risk.
And here's the balancing act. On one side of the scale, the pharmacy sector has massive potential. I mean, rock solid fundamentals and a long-term demand for healthcare. But on the other side, there are very real risks. The government could change the rules, competition is cutthroat, and healthcare trends are constantly shifting. A smart analysis weighs both sides of this scale. Now, it's essential to be really clear. This explainer is an educational tool. It's designed to give you a framework for thinking, but it is not financial advice. Always do your own research and consult with a professional before making any investment decisions.
We've walked through the entire process, from understanding a single company to analyzing its competitive universe. You now have the analyst's playbook. The only question left is, what will you analyze next?